Gill. I guess if you...
Paul Gillis here.
Hi, Paul. It's Z and Joe here from the Australian Taxation Office. How are you?
Hi. Good. How are you? Sorry to be a little late here. I was waiting for the call to come in, and something went wrong with their system.
Oh yeah, no worries. Just glad you made it. So we'd just like to get at a high level of a better understanding of the Chinese tax and accounting system. We've got a lot of...
I'll do the best I can.
Yeah, we've got a lot of inbound Chinese money here in Australia, and they're conducting businesses here, and so we'd just like to get a better understanding of what's happening on the other side of the equation, I guess.
Okay.
Yep. If I could just refer you to your screening responses.
Okay.
Yep. Apologies. I think it got a bit garbled. These questions have passed through a couple of other people since it's left my hand, and I think something's got lost in translation a bit. So the first question, considering the Chinese accounting standards as per Article 16, etc., really what that's trying to get at is, are businesses supposed to operate on an accruals basis in China?
Right. Yeah, the Chinese accounting standards are actually quite similar to IFRS. They are, in some sense, they're maybe you could say they're closer to U.S. GAAP, because they're often, although most everything, with a few exceptions, is compliant with IFRS, Chinese accounting standards are more restrictive about the positions that you can take. And often more prescriptive in terms of disclosures that are required. But in general principle, the numbers, the results you're going to see are not going to be much different than they're all going to be based on accrual-based accounting, and they're going to be what you'd expect to see normally.
Okay. Yeah.
The differences are on issues like impairment and things like that, where you might see the timing of a transaction being done differently.
Okay.
Is there any basis for cash basis?
Sorry. So, is there any basis for cash accounting in China if you're a business?
Well, some small businesses have historically not actually been taxed on the basis of net income, because that is often difficult to prove, because the quality of books and records might be quite bad. And so what happens then is quite often the business will be taxed on its gross revenue. And it's really a negotiated tax rate. They basically negotiate a profit percentage based on industry numbers, and this is particularly common with small businesses like restaurants, where they would just basically say, well, we'll deem you to have a profit of 20% of your sales, and then we will tax you on that basis. So you'll end up paying effectively a 5% tax rate on gross income. And then they don't bother to calculate net income in order to do that. I mean, that is sort of a administrative convenience more than a real alternative under the law. But where there are weak accounting records, that's often the way it would get done.
Okay, well, that's interesting to know. And so, is the proposition for accruals basis accounting in China Article 16 of the accounting criteria for enterprises, or if not, what's the bit of legislation or the regulation which says it's accruals basis accounting?
Yeah, it's all based on the accounting standards for business enterprises, which is I don't actually know the legal foundation for it, but it's required for purposes of reporting to the government, and the real requirement comes from the requirement to get a business license, you've got to produce audited financial statements to the Administration for Industry and Commerce.